Alright guys, one more time, comment, subscribe, and you'll be entered in to my giveaway of silver on the 17th. Each comment and subscription will give you a unique entry into the contest. So comment and subscribe as much as you can. Of course, I know you can only subscribe one time, but still, that'll give you entries into the giveaway of silver. Alright, this story comes to us from Bill Holter. Doorways and liquidity. A very curious thing happened overnight in Japan. In Japan, trading in the year 10 bond, in the 10-year bond was briefly halted. This was a result of a sell-off that pushed yields from minus 0.1%, 0.10% up to minus 0.15%. The price move in the bonds was actually only 0.6%, so not a huge move, but the circuit breakers were hit and trading stopped. So why is this a big deal, or is it? First, the JGB market is the second or third largest and most liquid in the world behind U.S. Treasuries and maybe Euro bonds. This sort of chaotic movement should not happen. More importantly, I believe the circuit breakers are so tight because a panic event cannot be allowed to gain any momentum. Any momentum in the wrong direction at this point could easily become self-reinforcing because of leverage or margin used to carry positions today. Please understand, I am not picking on JGBs, as the same thing could be said of many, if not all, markets today, as markets are so intertwined. The point we are driving at here is volatility kills. Excuse me while I grab a drink real quick. This thought that volatility kills has become the absolute center of all financial markets on the planet, because everything has become derivatized. The leverage has expanded much further than just credit outstanding or margin balances. You see, derivatives morphed into the tool of choice to price or manage markets. Now, because these derivative markets have gotten so large, volatility cannot be allowed. Whether it be circuit breakers, mysterious software problems, or simply pulling the plug, volatility must be tamped down at all costs. It's no coincidence that volatility is rising now as liquidity has begun to dry up. All you need to do is talk to an institutional bond trader to know this to be true. Even small $10 million trades or less are tough to move, and here's the rub. The exit door has drastically shrunk, while the population in the room has continually expanded. If we look at only the credit markets alone, the room is inhabited by $7 trillion worth of bonds trading at negative interest rates. Stating the obvious, this is the largest greater fool trade in all of history. All bond traders are really buying bonds to lock in a negative return. Do they really believe that they will win because the underlying currency will gain value even though the stated goal of every central bank is to debase? No. The only reason a bond trader would purchase a negative yield is because they believe there is a greater fool out there who will purchase that bond from them at an even greater negative yield. Now, you must ask yourself one more question. Are negative interest rates the new normal and here to stay? Logically, the answer is no, because mathematically, a system based on negative rates is like a snake eating its own tail. Practically speaking, negative rates are an accident waiting to happen when someone finally yells fire. Speaking of doorways and liquidity, if you understood what was meant in my last writing when J.P. Morgan testified, gold is money, everything else is credit, then you probably have an idea where we are going here. The entire system is credit-based. Everything you do, use, consume, even touch on a daily basis had the use of credit somewhere along the way. This even includes your dollar bills in your pocket. Put simply, we are living in a credit mania. Gold, and especially silver, are ridiculously small markets. Real global production is about $80 billion per year. Excuse me. $80 billion per year for gold and $12 billion for silver. Unless you have been sleeping or just don't get it, the stock of silver and gold has been continually diluted by paper over the past 4 years as a means to control the price. Now demand has gotten so great they are having a problem creating enough paper gold fast enough to contain the price. The doorway into real gold and silver is very, very minute and will become 100 times smaller than it already is once people with paper receipts find out they are holding nothing. What I'm trying to say here is this: on top of current and safe haven demand, there will also be demand from those who have already bought. In reality, they own nothing because their previous purchase was deflected from metal into paper air. I know the above is not groundbreaking news to many of you, but it needs to be reminded once in a while. The exit door for the massive paper credit buildup is small and getting smaller as liquidity shrinks and leverage grows. The interest door for real gold and silver may not even exist once people understand they are the very core to the strong dollar fraud. You see, liquidity has a direct effect on how functional any door is, whether it be an exit or an entrance. Not enough shrinks the exit, too much closes the entrance. As an announcement, many of you have been reading my work for the last 9 years. My work has been found all over the internet, on numerous websites, and in the very near future, my work will only be found at JS Mindset in my partnership with Jim Sinclair. Jim and I plan to do at least one monthly audio question and answer session from subscribers' questions. We have a couple of other plans for additional content in the works as well. So please visit our website to keep abreast with the upcoming editions. Standing watch, Bill Holter, Holder Sinclair collaboration. Comments welcome. So there you have it. The liquidity is drying up, and these people are going to be screwed when they try and sell their bonds, because they're going to find out that there's no buyers for all these bonds. Anyways, guys, like I said before, comment, subscribe to enter into the gold contest, or the silver contest. I keep saying gold, I'm sorry, I mean silver. The silver contest, we're going to do it on the 17th. Also, like these videos. It really helps me out. It pushes it up into YouTube to where more and more people can see it. Also, take care, have a good weekend, and we'll see you next week.